Alan Knuckman is joining us on the phone from Agora Financial. Alan, we've got stocks following up last week's rally with some pretty solid strength this morning. There's not a lot of reason for it that I see. The COVID news in the U.S. hasn't exactly gotten much better. Maybe around the world it's starting to stabilize. What do you think, Alan, on the macro?
Difficult question right now because we've had the bounce we were expecting. The question now is what happens next and how does the market view this? So the risk reward right now is more even, more balanced than it was obviously last week. We were way oversold, way overdone to the downside. We could see a bounce coming at some point. But the question is now that we have a 20% bounce, what's next? For me, all I can do is look at it technically. And 2,800 is the halfway point of this drop from the top in the S&P. So let's see how the market reacts if and when we get there. If we test it, if we reject it, if we get through that, I'm going to have to let the charts tell me what's next.
Yeah. All right. So right now, Alan, what are the important parts of the chart? I mean, what for the S&P 500? I know that some were looking last week. The Dow technically crossing into bull territory. What is kind of going to give you that, hints? I mean, we had such carnage on the downside, Alan, that how do you even find levels in a basically vertical line lower? What matters? What's important? What thresholds are impressive?
The market stabilize and trade sideways and consolidate a bit. The longer we consolidate, the more clues we can have, and then we can, start using the chart patterns like we used to. But right now we're in somewhat of a no man's land for what's next. You're being awfully predictive if you can step up here and you're very confident that the market's going to go straight up or go straight down from here. There's a lot of missing pieces. But again, to get back to some of the good news in the fact that the market had digested this so quickly and may have put in the worst case scenario. Let's use the word may again. May have put in the worst case scenario very quickly. Markets look forward and maybe they're looking at the light at the end and the end, way end of the tunnel, as opposed to a slow bleed, which would have been harder on anybody when it comes to stocks.
Alan, if we rally through bad economic data this week on top of what we did in last week's jobless claims, if we get another rally on 1 million plus jobless claims, does that mean that we have priced in some of the worst case scenario? I mean, isn't the market like screaming out at that point if risk assets are moving higher on some of the worst data we've ever seen, that this market is priced in a lot?
Oh, and you talked about the bazookas. I don't even know bazooka is the right phrase to talk about the injection that we're putting in the economy. So it's there. There's a backstop. It's not a put. It's a complete brick wall backstop. They're going to do anything and everything to support the economy. We have to look at this separately from what's happening health-wise. And the stock market is the stock market. That's all the stock market reflects is the stock market impetus. And we'll see if the worst is over, and that's what we have to be looking for. As a trader right now, I'm in, like I said, it's risk reward level. Things are more difficult now than they were last week, obviously.
Yeah. All right, Alan, let's keep going here. I know you got your eyes on stocks, though. Specific companies have been starting to go their own way based on some of the reports that they've given in their guidance and more. Square was an interesting conversation last week we had with the folks over at ARK Invest. They were saying that Square might actually play a role in people getting their payouts from the fiscal plan. Square also will be insulated because of the way folks can exchange money virtually, of course. It seems like you like the stock from what I'm looking at in your trade today.
Stock has some momentum. This stock is up 67%. Let me say that again, 67% off its lows here just to 18. So it's done a complete U-turn. The halfway point here of this drop from the top, it's around the 60 level. So we're looking for that 60 level as that midpoint target resistance here. We'll see if it can make a push to that level. And again, this is another example of a stock that just got so badly beaten. It was so bad it was a buy, and now we've seen some good follow through here. We see a little bit of flag at this level, but there are plenty of gaps up above when it comes to Square. The position I'm looking at is a May option, about 6 weeks at a time. The May 45 call has a delta again, the same old. The delta on that's about 75%. for the May 45 call. It's going to act like a stock, ties up less money, has 6 weeks of time, and we can get to that 60 level. It's going to pay off very nicely. Now, remember last week's play, I use this indicator that evaluates money flow, and there was money flow going into Royal Dutch Shell, and we did I think a June option or maybe even a July option. We didn't need that much time because Royal Dutch Shell, for whatever reason, had a big bounce, and we used that as the opportunity to exit. So there are going to be very quick plays in this marketplace, and that's why I use this strategy I do, buying these in the money options that act like the stock, and a modest move in the underlying stock gives big payoffs in the options.
Yeah. All right. So Alan, right now you're just buying straight up calls, the stock replacement, which does give you a little bit more buffer, but not a whole lot, right? I mean, it's basically like going long the stock. So if there's another big pull back, you're going to get hit on this.
Has limited risk to whatever you paid for it. So if you pay, I think it's right now trading at about $1,000 for this particular option. So that's your maximum risk. You can put a stop loss on it like you just would a stock. You can put it based on the option price, or you can do it based on the stock price. So you can, if you have an exit strategy, you can execute your exit strategy. You talked earlier about the spreads now are very wide. So you've got to be very careful about placing price orders and play their game. Make sure that you're getting your prices on your entries and your exits, and don't give up too much edge, because that can make a big difference, especially this kind of volatility.
Yeah. All right. Alan Knuckman, appreciate it as always. Chief Market Strategist at Agora Financial. I was trying to get you bulled up, Alan, but I'm not getting the Super Bowl vibes right now. So maybe a couple more Green Days.
Tony, I was super
circle
bullish.
Back with Alan.
I was super bullish the other day, but now that we had the full bounce, the question is, now what? Now I'm going to ask you, now what?
Hey, I wish I knew, Alan. I'll tell you what now. Next block, Mr. K. We got to roll. Appreciate it as always, Alan Knuckman, Chief Market Strategist at Agora Financial.